Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. As you can see, I am not at my office. I am still traveling, heading to the airport to go home and end my vacation. All right, let's talk about the market today. Man, CPI, Consumer Price Index. Remember, tomorrow we have PPI, Producers Price Index. Remember, I always explain what CPI is. CPI is a gauge that measures the rate of change in the goods and services that we consume. CPI. And then tomorrow, PPI is the same thing, but based on producers, right? We consume what producers produce, and we should own what producers produce. We should own the companies, all right? So let's get right to the data. Without going into anything long and showing you all of the numbers, everything was in line or lower, meaning all of the data that came out of CPI is proven that inflation is cooling. Inflation is cooling off, right? And that's what we want. As we can see here, I'm looking, I know you guys can't see, but I have CNBC on now, and you guys could see that the Dow is up over 550 points. NASDAQ is up, I believe it went up over 2%. And correct me if I'm wrong, I just saw the flash. But what else happened? The yields, the bond yields, the 10-year is cooling off, right? And that has been haunting us. These high bond yields have been haunting us. Now, if the bond yields start to decouple, or should I say, uninvert the 2 and the 5, then that's going to be another good signal, right? So we're just having good data. Let's see what PPI comes out tomorrow, what that data is, Producers Price Index. That we saw what CPI is, and even core CPI was good, ex food and energy. So we have all of this great, I think is great inflation data, and the market loves it. Now, we know that Moody's outlook for the U.S. Credit rating was not good. It went to negative, but it was just an outlook. We didn't get downgraded. I believe there's 3 major indices that rate the U.S. credit. So the market didn't like that, but I believe it was an overreaction, right? So I didn't have good service. I couldn't post anything, but could have made a lot of money based on thinking that the market was overdoing it when it went negative, right? And so I talked with Josh about that. I make a lot of money that way. When I think the market is doing too much or having a knee-jerk reaction, I will do the reverse. So for instance, if the market has bad news, sometimes I will short the Qs. I will do a put on the QQQs. For those of you that are in the Discord, you've seen me do this a million times and make 50, 70, 100, 150%. And I usually do that in the mornings, right? So just let me tell you, I'm gonna tell you guys that most professional traders are done in the morning. For those of you that's in the Discord, I'm gonna continue to do what I do. Get in and get out in the mornings, right? And so I just wanted to put that out there for you guys. I'm in, set my stop losses, and I'm out, right? And then sometimes I'll come back in the afternoon, because that's also, most of the trading is done the first hour and the last hour. The 2 best days for me are Mondays and Fridays. You let me know what works for you, okay? If you figured a way around that, yeah, I do some trading on Wednesdays, but I lower my positions and the amount on Wednesdays, because that is where it gets extremely tricky. Now, let me tell you about the probability of the Fed raising interest rates. The probability of the Fed raising interest rates fell this morning in the pre-markets from 30% down to 7%. So now, based on a CNBC gauge, there's only a 7% chance, all right? Based on their polls, there's only a 7% chance. It went from 30 to 7% chance of the Fed raising interest rates again this year. So like I forestated earlier, I trust the data. I trust what I see, but I believe that the Fed is done. Now, I also believe that he's going to continue to use the weapon that he's been using. I believe he's been using it quite brilliantly, and that's his mouth. Just simply sounding hawkish and not taking action. So when he does that, I know that most times the market has an overreaction. So if the market goes negative by him talking hawkish, I can just simply buy the TQQQ, which T for tall, S for short. This is not an option, it's just a regular stock. For some of you guys, those are investments. For me, TQQ and SQQ, TQQQ and SQQQ are not investments. They're only trades for me, okay? I just want to be clear. I don't trade like anyone else. I just want you guys to know, for me, these are trades that I get in and out in days, right? Mostly 48 hours, okay? So those are just some hints that you don't need anybody. You don't need to wait on anybody to show you what to do. You need to practice these. Just try one and see how it goes. And I would just do that for a period of time until you get into a rhythm that works for you. But hey, it's been a great day and everything is looking good. Now, back to the yields, the bond yields, the 10 years cooling off. I think at the beginning of this year, everyone was talking, including myself, we were talking because the data was showing us that we would do for what? We would do for a recession, right? But what happened? AI happened. Me personally, I believe that AI saved us from the brinks of the recession. If you look at how much artificial intelligence have lifted the market, I believe it saved us from going into a recession. Now, I see right now, this is not, you come back a month from now, data may change. But right now, I see that we could, this is not absolute, we could end the year higher. The S&P could be higher, not the highest of this year. I'm not saying the highest of this year. I'm saying higher than where we are now, okay? But it could end up being higher than we have been all year. That's a could. Now, we do what? We trade the market that we in. We can make a plan, and if the data shows us anything different, then we trust the data. Doesn't matter what I think, Mo, Keenan, Josh think, it doesn't matter. We trust the data, and that's what we're going to continue to do as we continue to make money. Now, there's two things I want you guys to look at. Number one, I know I haven't talked about it much, but Moomoo. It's not just the free stock. For those of you that don't have Moomoo, it's not just the free stock we want you to look at right now, but they're going to pay you 5.1% on your cash, the extra cash that you have that is not in a position, okay? So click the second link below. Matter of fact, that one I'm gonna make the top link on this one. Make sure you take advantage of that. You're not gonna beat that, all right? That's better than high yield interest savings accounts, okay? And so for you to have your money in a platform that's simply gonna pay you for having the cash there, I dare you to find a bank that's gonna pay you 5.1%, right? So that'll be Moo, the top link. And then right beneath that one on this one will be Stock Up University. We have had a surge of people purchasing Stock Up U. Come and join the university, learning and earning. I always say spend hundreds to make thousands and then tens of thousands, okay? We're gonna leave it right there. Next time you guys see me, hopefully I'll be at my desk, in my studio, in my digs, okay? Pray for me that I have safe travel. We'll see you guys later. Live, love, laugh, and learn.